Schedule 1 has a few catch-all adjustment lines that feel random, but they're still fair game on the EA exam. Two big ideas. Some lines are basically placeholders, and some are write-in deductions that are above the line. Above the line means you get the deduction even if you don't itemize. So you're reducing AGI directly, which can unlock other tax benefits. Line 22 is easy points. It's reserved for future use. No deduction goes there. On the exam, they may show a partially filled Schedule 1 and see if you try to force something onto line 22. Don't. If you see reserved, your job is to leave it alone and move to the next line. Line 23 is Archer MSA contributions. Think of Archer MSAs as the older cousin of HSAs. They were for self-employed people and employees of small employers, generally 50 or fewer employees. New Archer MSAs aren't really a thing anymore, but legacy accounts still exist. On the EA exam, you're more likely to identify what it is than compute it. Now the real other adjustments bucket, miscellaneous adjustments. These are write-ins listed in the Form 1040 instructions. The key exam takeaway is you do not need to itemize to claim them. If the fact pattern says the taxpayer takes the standard deduction, these can still be deducted because they live on Schedule 1 as adjustments to income. Know the usual suspects. Jury duty pay turned over to your employer is a classic. Whistleblower awards can create a matching attorney fee deduction limited to the includable award. You might also see reforestation costs, Olympic and Paralympic medal prize exclusions, certain niche retirement contributions, and a housing deduction from Form 2555. You're usually being tested on identification and limitations, not memorizing every obscure item. The most testable limitation here is unlawful discrimination legal fees. If a taxpayer sues for unlawful discrimination, race, sex, religion, age, disability, attorney fees, and court costs can be deducted as an adjustment to income. But there's a cap. You can only deduct those fees up to the amount of the award that's included in gross income for the year. No double dipping beyond taxable proceeds. Here's the mental shortcut. First ask, is the settlement or award taxable? Then ask, how much of that taxable amount is included in income this year? That includable income is the ceiling for the legal fee adjustment. On the EA exam, they love mixing this, with the rule that the taxpayer often reports the full award, even if the attorney is paid directly from it. Maya sued her employer and wins a court award for emotional distress caused by unlawful discrimination. The emotional distress resulted in hospitalization for a nervous breakdown. The court awarded total damages of $80,000, including $30,000 to refund the costs of her medical care for the nervous breakdown. How much of the court award is taxable? None of it. All $80,000, $50,000, or $30,000? Think about it. The taxable amount is $50,000. Damages for emotional distress are generally taxable, but the portion that reimburses medical care attributable to that emotional distress can be excluded. So you exclude the $30,000 medical reimbursement and tax the remaining $50,000. The tempting wrong answer is $80,000 because many students forget the medical reimbursement exception. Everly is single and plans to itemize deductions. Which expense would not be deductible on Schedule A? Sales tax on a vehicle purchase, a charitable contribution to a veterans organization, a personal casualty loss in a federally declared disaster area, or qualified medical expenses that were paid with a distribution from her HSA? Think about it. The non-deductible item is medical expenses paid with a tax-free HSA distribution. That's a double benefit, so Schedule A doesn't allow it. The other choices can be Schedule A items if the usual limits are met. The tempting trap is the casualty loss, but federally declared disaster losses can still be deductible under the rules.